Hey, what's going on, family? This is your boy MC Fire coming at you again with another market recap. It's today, December 24th. I'm gonna go ahead and close out a CSCO. It's pretty much ran up to where we needed to go. So we've got a CSCO. It is gone up 125%, and we're gonna go ahead and close that butterfly out. Kind of just using the tools that we have at our disposal to get high percentage plays and then scale in the future as these things become a lot more prevalent. You actually might have to cancel in place and give it some more juice. But yeah. So we'll put that sell order there. And if it works, awesome. If it doesn't, awesome. The cool thing about butterflies is that they are cheap. So if you guys know, throughout the whole last week and this week, um, we told you guys essentially that wait for the market to tell you what it wants to do. And today the market kind of spoke a little bit, or a lot bit, I should say. So getting above like all-time highs and kind of pushing for the Qs, the SPY, all that good jazz. We'll go ahead and look at that here. But beforehand, we want to go ahead and take a look at Cisco, good old Cisco there. So we had a play here, had a deep pullback. Wasn't too sure on the play if it had any continuation or legs. But we did foresee that it potentially could retest that high there, and it did. As it pushed above, we went on and took a butterfly. Butterfly is a little bit more of an advanced play, but it's a way for you, if you have a small account, to go ahead and start building your portfolio. Something as small as like $10, $12 can net you 100%. And if it's lost, that's the maximum you can lose. So buying butterflies with the right strategy is a good way to really grow small accounts. If you think that you need your play to work out and you can get 100%, doubling the money that you invest as regards to that play, butterflies are a good way to do that. So it doesn't have to run too much. You don't incur a lot of data decay. If it works, it works, and if it doesn't, it doesn't. This was really good. But just we want to kind of touch on the market here. So let's go look over at SPY here. SPY almost getting to that 50% mark where we kind of want to get above that 648 level. Remember, I said that's a danger area for the SPY because you could form this head and shoulders pattern here. You also have an opportunity to for the NQ, right? NQ actually did get above that, so that's why your earliest indication that the market might continue or it's in is not in failure zone has been met, right? We can go look at the IWI as well. This is the Russell showing relative weakness, so could be the one dragging the market down. But as it stands right now, we're heavily invested in the Qs. So looking at the Qs as a benchmark for strength is good, and we're picking the winners, which is really, really good, right? Didn't want to take this setup candle, even though it was there, because we wanted to get above that Fed meeting candle, the massive sell-off going up 50%. We're looking for a continuation, but as it stands right now, we're just going to wait and see and look for other opportune setups. Okay. So not too bad. We're going to go look at the alerts here. Got a slew of alerts for you guys. Okay. If you were watching the if you've been watching the channel, you'll know that a lot of the things that we've been kind of commenting on. If you go to your market watch, you could see like the alerts that we've been setting. So for December the 20, today is the 24th, right? You can kind of see what triggered. December 24th had some studies triggered, XLK, mark above triggered, as well as, oh, this is the 23. I don't know why it's on the 23. We want the 24th. Yeah, these should be the 24th. essentially, I'm not sure why it's updating on my phone, but it's not updating here. So we got some alerts on XLY. We also got an alert on ARC, and we got an alert on the Qs and Cisco. You just saw the Cisco. Let's go look at the XLY, and then we're gonna go look at the let's go look at the XLY. So it's the ETF. XLY, thank you. So consumer, just discretionary here, looking pretty strong. Above that setup candle, I went on and took the liberty of not putting it at the halfway mark because this guy right here is showing a lot of strength, right? The pullback relative to the other guys, the other ETFs and the other indices, it's still well within the 3 ATR metric. When you look here versus like the Qs, look back at the Qs there, right? Well within its range of 3 ATR and pull back pretty significantly to a support level, as well as it pulled back at the 8-period moving average. When you go back and look at the XLY, right, the pullback wasn't even to the 8-period moving average, maintaining a very, very strong trend relative to the other ones, and still way outside its 3 times average true range. So on the weekly, so that idea that we had to wait till it gets halfway, the idea was the XLY. My hypothesis was the XLY was going to continue to the upside as one of the more strong sectors in the SPY. Okay, so the XLY is in play here. You can almost take that position to the upside, but that's something that we've been talking about in our videos, right? ARC kind of the same thing, kind of at 3 ATR with a new trend change. So I like ARC a little bit more as regards to taking the buy. Once you get a trend change, nice rip. We kind of like to see our trend changes, but we like to buy the dip on our trend changes, like back here. I'll kind of show you what I'm talking about. So you can see here, there's a trend change, but then the setups are here in flat territory, kind of at the squeeze. So we'll throw the squeeze on there for you. I've been doing that a lot for you guys lately, just to kind of show you that the squeeze might be in play, but knowing when to get the squeeze, knowing when to get in and out of the squeeze is actually pretty powerful with our system. You can get some alpha on the squeeze. So let's say you got the squeeze indicator all the way back here. You could take the buy on the squeeze, which is fine. That's one alert. Like if you set for the squeeze to get heads up, hey, this is in a squeeze, you could set that. And let's say you take the first day of the squeeze, it's looking for a call because the trend is now green. Right? You get 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days, right, of anxiety, and that's 11 days of theta decay. So unless you're selling puts, right, you're not buying calls, that is money that's being lost via theta decay, right? So instead of doing that, right, we went on like you have alpha depending on what you're buying, like depending on what position you're getting in. If you're selling puts, well then that theta decay is working in your favor until it breaks to the upside. So that's one way to think about it. But if you're buying calls or verticals, right, then that's another way to think about it. You're missing out. We have alpha for all these days that you're losing theta. So you get in at the right time. You have 11 days of alpha. You take the buy here, stop out at the low. You take the add-on here, stop out at the low, and then the actual fire happens. Boom. And then you see nice profits. That's kind of the idea there. So here, moving forward, not looking to necessarily be a buyer at 3 ATR. I kind of tell you guys that we like to get in close to the moving average cloud and sell kind of away from the moving average cloud. But if it's in Never Never Land and you still think that the idea can persist to the upside, take it on a butterfly. Let it go. If it's going to push, it's going to push to the high, and butterflies are perfect for that. Just like in Cisco that we just showed you here. That's something that I felt like, yeah, this position has the opportunity to potentially at least run close to the highs. Well, the purple lines kind of indicate our butterfly there. And we went on and took that butterfly off at around 100, 120% return on investment, right? Things are scalable, but butterflies are really good for small accounts. They're really, 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 really good for small accounts. And people that don't use butterflies for small accounts and don't teach butterflies for small accounts, I would try to learn and throw that in your repertoire. We're going to go look at the VIX because we want to see how the market likes in its overall sentiment. The VIX is kind of down. I'm going to take this off here real quick. The VIX is down some points, so that's good. The fear factor, if you don't think about the VIX, I really look at the other internals. I don't really look, excuse me, I don't look at the other internals, but I do like looking at the VIX. It's just a good way to kind of gauge market sentiment and say, hey, is the market's fear above or below, right? Puts, calls, you have other indexes to know overall puts, how the overall market is being bullish or bearish. But the reality is most of the market, if they're trading options, is wrong. So if you're looking at most people's puts, most people's calls, you almost could use it as a contrarian, because if 70% of people are making money, then the statistics wouldn't be the statistics that 80% of people lose money in the market. So you almost use it as a contrarian indicator to do the opposite of what everyone else is doing. So I don't even use it. It's what's the point? Okay, so we got some other stuff that's bull in the day. We'll go take a look at that really quick. Don't want to take up too much bandwidth here, but we want to definitely pop a look there. One of these is supposed to be later on the day. Yeah, these are full bear for bull on the day. I don't know why there was two bulls. Anyways, so expansion contraction for the positive. Not looking too hot. Expansion contraction going. The weekly scan is negative or positive. Yeah, it really likes adjusting my scanners. Right, you saw two bears. Didn't put two bears. It just kind of did that. Kind of glitched that out. So check on your scanners. Sometimes they're weird, but got some expansion positive. There's supposed to be an expansion contraction negative there. Also, we'll go in and fix that later. But essentially, what we're saying here is that the expansion contraction, one of the other scanning indicators that I have on here, if it is starting to cross positive, is not a lagging indicator. That's good. So our RTY, again, watch out for the Russell. Not necessarily, it's in a lot of danger when it comes to this pivot right here where the alert is. To that yellow line, that's where the pivot is, as well as it's got a lot of relative strength as per compared to the XO, the QQQ, and the SPY. So we wanted to get out of the danger zone. The danger zone is getting above the 50% mark on where the Fed had its meeting, and above this pivot is not out of hot water until it does that. So a little bit more caution, a little bit more wait and see to see what the market is doing. Remember, the VIX is down. This could be a good one that's in play. TGX. As we see here, we got an alert here, so a break above that would look very, very juicy. So we kind of want to see that happen for us to potentially take a play in TGX, right? With room to grow. The idea is to get a decent risk to reward ratio. So if you could take this buy and even if it gets up to the high, you set your butterfly, you set your vertical, right? Things like that. You want, or a rotational zone, you want there to be enough juice to justify putting your risk on the table. That's really kind of the point. So I'm going to go ahead and mark the high here for you, just so that we could see our risk to reward a lot more clear. Okay, I'm gonna put that up there. Boom, there it is. And then I'm gonna go ahead and mark this red. Boom, there it is, right? So once we get up here, break that, looking about a 2-to-1, almost 3-to-1 risk to reward ratio. Your entry would be at 123.28, and you'd be taking it off at 127. Okay, essentially risking a couple dollars to make about $4. So you're risking $2 to make $4. AE, your risk reward being around 2-to-1, right? Not too bad. Got some bonds going on here. They have been selling off pretty aggressively. So, nothing. We've kind of been talking about that in the other videos. So the bonds. Also, massive sell off in NVO. I was telling you guys that the aptitude for it to close the gap is pretty high, and that seeing this setup candle 3 ATR, you could be a potential buy biased buyer here. In that way, at least it'll fill the gap, or it close to the 8-period moving average, whichever one comes first. That's kind of the idea. But as it stands right now, there's a slight pullback here. So not looking necessarily for a play quite like this. There's other plays that we want to prioritize. So buy bias plays, not looking for it because it wasn't necessarily something that we would be looking at to throw in our portfolio, right? NVO is $87 a share. So not too bad, but unbalanced volume is not exactly where we want it to be. Unbalanced volume is red. So let me show you what I'm talking about and why. Okay, NVDA, cool. So when NVDA, through its more buy biased setup, right, you had unbalanced volume that was green, freakishly mass sell off for the overall market, but this stock in and of itself was prime time, and it was in a good sector, a strong sector, and unbalanced volume was still relatively green. So I was like, price and volume are slightly increasing, and the moving averages cloud actually was still green. Had a little bearing on it, other than the fact that I wanted to be in NVIDIA, and I still had a decent if then. If it broke below this rotational zone, and we do set up candle as well as it broke above this level, then we would go ahead and take the play. So this chart in this stock is significantly different than the fundamentals and the way that NVO is made up, right? NVO, if I'm not mistaken, is Novo Nordisk is like a medical company, and so unless they have like major breakthroughs or stuff like that, earnings might not be enough to get the market's appetite sated. So this, other than the fact that it's so low in price, it has no other catalyst other than that it's low in price. So what's low could go lower, but the only thing that really is a argument for taking that position is that it's well below 3 ATR, almost in the 4 ATR on the weekly, really stretching its limits there. Not only was it stretching it, it was on a downtrend. It was a downtrend already. So this would be a little bit more of a reversion to the mean trade that you could see. How I would set this up is I would not necessarily look for a vertical. I would actually look to sell puts. So while it's lingering down here, if it stays down here, and as it's kind of closes to a reversion to the mean, you would be gating that theta as well as the direction as it when it eventually does push up. Okay, so this isn't necessarily a butterfly. Maybe you could take a butterfly on it, but you don't know what the 8-period moving average is going to be, and maybe you take a you sell puts there. Okay, but I wouldn't be looking to buy a vertical. Definitely wouldn't want to buy naked calls either. So that's kind of where I'm at on that one. Light sweet crude. If you notice, there is a descending triangle on this guy, right? Bar coding down here. So you see the buying pressure kind of step in. Remember, this is an invisible line in space. We don't treat that. We don't treat this as law. We really treat the fact that price has a final say at the end of the day. And if it kind of gets above this relative buying pressure, then we could say, okay, the ascending triangle in and of itself is no longer valid. But we would be looking for a break below 1670, 6670, right? That's kind of where you could look for a break if you want to take the classic descending triangle. Unbalanced volume is still red. And if you notice, several bounces at this level, very established barcoding here for the rotational zone, as well as descending triangle for the previous pivot highs here and here. So look for that break of 66.70, and then if we can get above the trend line here, that right there could be pretty powerful for a very juicy rip the other way, right? Ascending triangles and descending triangles don't have to fire the traditional direction. I've seen them fire the other direction and be just as powerful. NVT, you got NVT here. Not really much to write home about here. Ideally, right, if it was going to sustain the uptrend, we got a setup candle here that didn't get washed. So we kind of just leave it alone. It is in rotational territory, though. I'll mark that out for you. Retesting previous pivot lows. Right here, boom, boom. So as you see right here on the rotation, there is more rotation down here. So I will actually mark that for you as well. Boom. So yeah, we got really decent rotational zones here. They're kind of wide, but we kind of like them wide so we can have a decent, more spread out risk reward ratio, right? We really do like that. Not looking too bad, but look for potentially rotation, right? If you can get like a buy off here, take a buy, stop out at the low, or you could be 2-bar professional and go ahead and stop out below that range. If you guys are one of those diehard fundamentalists when it comes to support resistance lines, yeah, I could take, if it takes the break, you let it go. That's well within bending your rules, but certainly not breaking it. Once it breaks that, then you're done, right? Easy. Look at XLF here. XLF not looking too bad, right? We do like the fact that it's above the 50% mark on the Fed chairs call out there. That is probably shows relative strength compared to the other ones. The XLF has been one of the current outperforming sectors in SPY as of recent. Really, the XLF normally tracks kind of with the S&P, so the fact that it's there is pretty good. So what we'll do is I would say it's out of hot water to the downside. Could be wrong, right? But we'll go ahead and put an alert above the Fed chair's last meeting minutes, and it still has a lot of room, right? Even though it's above the 50%, above this rotational. If you want to be aggressive, I could say you be aggressive. Me, I'm looking to be a little bit more conservative, take a lot of base hits, a lot of doubles, and then steal home when we can. So this right here is something that once it crosses above there, then I would want to know, and then be a little bit more I'd be a little bit more confident in looking for it to rally to the upside there. We did have a play in STZ, and we rolled it like yesterday, and it's since had some significant fall, or not significant, but it's had some fall through. So to the play, if you guys watched the video, one of the headings was STZ taking off some of the risk on the constellation here. We took the short based off our setup. It was in a downtrend. Unbalanced volume was trending negative, and earnings weren't looking too hot on last earnings. So before earnings, we were like, okay, could get pretty dicey for this stock. It did fall through to the rotational zone, which we did pull almost all of our risk off the table. So everything that's follow through beyond that, that's pure profit. So if it continues, and it has a lot of room to actually do that, right? Not anywhere close to a 3 ATR, and that's what I'm talking about, room to go, right? Relative to the moving average cloud, into where we consider it to be an extreme, there's plenty of rotational zones where it's been before, not getting to absolute lows, and 3 ATR is within the mark, right? Doesn't get down there too much, but when it does, we're hoping to see that take fruition. So we're breaking this previous pivot low, and that is strength in our and against our argument or our clause there. We would be looking for it to continue to get down to almost 3 ATR, right? But we've essentially taken all of our risk off the table. That's the most important thing I want you to notice. Uh, with it moving as far as fast as it did, if it continues, then all of it's profit in our pocket. And if it reverses on us, then the risk to us relative to us being in the play for the reward is extremely, extremely reduced. So shout out to STZ there. That's kind of the name of the game. Defense wins games, offense sells tickets. We're going to look at some of the other major players, and then we're going to go ahead and call it. So we got gold. We'll take a look at gold here. Gold struggling. It's still in a positive cross territory. Guy had to close out a couple of gold positions. They just expired. Not in the direction we wanted. It did a slight push, but that was all she wrote for that. Silver is going to be a little bit of the same story. A little bit more relative weakness. Actually, silver is in a relative downtrend. So we would be seeing silver in its new downtrend, unbalanced volume red. We would be looking for potentially a rally and then a short for silver. So yeah, definitely get out of the way of this negative trend in silver. I don't think that's going away, especially if the market conditions and the Qs, the SPYs, and Bitcoin, all those as a competitors have changed for the commodities, right? Something to think about. Speaking of Bitcoin, go look at the Bitcoin BTF, right? You've got the Bitcoin ETF here. Looking a little positive on the day. Pretty massive pullback over last week. But yeah, in 3 ATR territory. But there's a lot of hoopla about Bitcoin hitting, the 100K mark, right? So Bitcoin hitting that $100,000 mark, people are going to be watching it, right? If you look here, it essentially does have a setup candle in positive territory. Now remember, this is 3 times the average true range, but Bitcoin's its own beast when it comes to volatility, right? Bitcoin has no problem staying well outside of 3 ATR for extended periods. People always like to tout this is been the number one performing, I guess, commodity. Beating the SPY, beating gold, silver, real estate, all that stuff. So that claim does actually hold true. So that's something you have to think about when Bitcoin gets going. It will go, like people say, it can get as high as $1 million. It may be, right, maybe not in our lifetime, but it could get that high, right? If you hold it, the next 120 years, sure. The problem is that for each Bitcoin mined, the next Bitcoin to be mined is going to be the energy and the time for your computer to get to the calculations to create the Bitcoin, to create that. It's going to be harder. So just keep that in mind. That's there. You also have Ethereum, right? I'm going to go to the ETF first, right? You have Ethereum here, and it hasn't really kind of got up above. With Ethereum, I'm a little bit more prone to take it cautious. Again, these things are very volatile. So in that regard, safety and making sure you have momentum on your side is a little better. We'll go down to the hot sheets, and then we will call it. So we've got ETF watch. Yeah, we'll go down here. Apple, we're just going to kind of run through these, right? Apple pinging at relative highs, pushing past relative highs. Apple probably almost single-handedly holding up the market. AI, a lot of people are into this stock right now. It's relatively new at $35, still relatively cheap. People say it has the potential to make waves. The only problem I see is I still look at the data, basic data, like the earnings aren't necessarily where they need to be in unbalanced volume, even though it went positive on the on price. Unbalanced volume is relatively negative currently. So I would want to see that start to shift. It is to a point where it could potentially shift. If you kind of look back historically, it's never been this low. So this pullback is right into support there. If that could turn around, we start throwing setup candles. Might look to take a position buy here. You also got AMD talking about, hey, buying, maybe long term buying and accepting the risk and then a buy bias on AMD. Let me zoom in here. Sorry about that. But you see, it's been in a very sustained downtrend. Meanwhile, earnings have been increasing, unbalanced volume has been increasing. So it's not out of the woods quite yet. But I would say that you buying at support here wouldn't necessarily be a bad thing, right? You buying at support because essentially, if this is a giant rally, you could look at this as one giant rotation. It just took like a long time to get down there. It really took the elevator up and is taking the stairs down, so to speak. You got Amazon again in the stratosphere, so that's good. We talked about ARC already. You got AVGO lined up here. AVGO pushing back towards highs, which is good. We are actually still in the play for shares, but no options on AVGO. Options we'd like to, because we need the position to move. Buying here at the moving average cloud and selling away in the 3 HCRs, ideally what you want to do. And we did that pretty effectively over the last couple months, right? Buying here, roll, kind of at highs, letting it go here as it breaks below our setup candle. Nice juicy pullback there. Doesn't really fill that gap. There is that gap risk. So we want to be a buyer a little bit closer to the moving average cloud and take what we got. We also got shares way back here on that day. So again, this was another one of those that I was willing to be have a buy bias at that level as there was a pullback. And the cool thing about Broadcom and AVGO, we've been watching this in up here. We were telling you, wait for a pullback, wait for a pullback, wait for a pullback. It had already erupted forward, and then we wanted it to pull back, and it was rotating. It looked like you wanted to complete the rotation, and we were even saying, hey, just wait for a pullback from these highs. It can pull back from like these 177.07 level. It can pull back from those highs. So our average price is like 147 for the buy, and then now it is at 250, or excuse me, sorry, 238 currently with a high of 251. So there's a lot more room to grow with AVGO and Broadcom for sure. We're gonna go look at one that I've been tasked with watching here, CACI. CACI, defense company contractor, had a massive run. Some of these stocks get overlooked because there's just not many brands, but there's a lot out there and opportunities. You guys can create your own alpha by finding, doing research on certain stocks and finding out what makes them tick. So if you're looking at earnings, right? Earnings didn't come in that hot for this play, and then recent shift in the news caused also this to start faltering pretty significantly. So if they can get their act turned around, man, this could be a potential good position, a good play to take a buy bias, in my humble opinion. Really good performing from a fundamental standpoint. Chipotle, also known as Chipotle, is chugging along. It is an uptrend here, and got a setup candle positive. But again, if you notice, these setup candles aren't as violent as maybe the red ones getting washed and then absolutely ripping. This is kind of what we want to see post earnings. Nice little pullback, very very nice pullback. I got washed here. Taking a buy bias there because I kind of wanted to be in Chipotle and just stuck to my rules, had to get out. But this play was actually the more prevalent play, this one. And then you stop out at the lows there, and it just kind of just ran. So Chipotle, losses are lessons, and this is lesson as a lesson learned. And I'm glad to receive the lesson because moving forward, this is what makes you a better trader. You make your money on the buy, not on the sell. COHR. Nice little juicy setup candle a couple days ago, but I was looking more for a red one. So Red ones like this, boom, couple days, nice buy biased, or not buy biased, nice little blowout candle here. Like if you took this play 1, 2, 3, you would take the buy above break of high and then stop out, respecting all of your buyers there, and then nice 2-to-1 risk to reward there. So system definitely something to watch out for in the right position there. But essentially, yeah, you kind of got this overall. Let me mark it for you. And you could probably already see it if you're looking at the lows, right? You got this slight buying pressure trend line, as I like to call it, there. So as it starts to get established buying trend, you could say, hey, I could take that, and this would still kind of be valid. Buy above here, maybe hit a butterfly or vertical, stop out the low. Now, I'm not interested in it, but that might be something that you guys can lock in there. Got corn. We did get stopped out on corn, but corn is changing the trend. So sometimes it happens. Sometimes it doesn't happen when you want it to happen. But the trend is changing for corn. So this candle is actually in play, getting washed over the last 2 days. You can almost take the same play, right? Take the buy, stop out of the low. Not looking to revenge trade this, but unbalanced volume going green. The trend's going green. We might assess it going into later weeks if it still kind of remains here. But this is ideal, right? I still feel a little salty about getting stopped out on corn here. Yeah, definitely a little salty there, getting the stop out on corn. We did want to go ahead and take a buy though, if this relative strength can show strong for this ETF. We're talking about Bitcoin. Robinhood is actually on this list. Even after its massive capitulation due to it coming out and having really bad news as it regards to its trading up its trading community in the AMC debacle that has since subsided. The company's earnings are going positive. So I just want you to know, guys, the market overall, right? They do look at the fundamentals. They do look at the dollars to see, is this potentially going to be a good proof of concept? Are you positive? So the whole time while the company is negative, right, losing money, the stock is steadily losing, even though the trading community knows that this potentially could be a hazard. Once it starts going positive on the earnings, the stock itself actually starts going positive. So it's something to note, right? Just look at that. You've got negative, 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 slightly positive, right? Back negative, and then positive 1, positive 2. So it really starts pushing there in continuation from there off of proper earnings. So this is one that, getting nice juicy pullbacks. Sorry, we're talking about it late, but nice juicy pullback would be helping. Right, same thing there for IBIT. Nice juicy pullback would be nice. This is one that I've been hearing a lot in the news lately. In micro strategies, if you can get a pullback here, that'd be nice. Nice little setup candle already in effect. But the pullback this has been extended way outside 3 ATR, almost in 5, 6, 7 ATR territory. So now a nice pullback is definitely acceptable as well. And it's at the 8 period moving average. The moving average cloud, though, is extremely wide. So this is kind of something that you want to see a little bit of ahead of time or know about, kind of be in the know, so to speak. MU still struggling. Remember, we did take a couple positions in MU, but we kept it to within well underneath our risk to reward ratio that's required. So with this complete capitulation based on earnings, even though earnings was actually better, analysts really, it's more as it regards to how do you compare to the analyst projection of your earnings as opposed to the actual nominal value. So analyst predictions expected to be a lot higher, and it came in significantly lower than the analyst. So if you want to blame anyone, you can blame the analyst, because the fundamentals show that earnings have increased, right? It essentially is a 100% stop out. So we're going to keep this on just for this, because essentially it's at net profit 0. It's gone essentially to 0. NVDA. NVDA here, making very significant strides to the upside here off the setup. So loving it, right? No red setup candles as of yet. We would have loved to see one of those put in, and then went on to take that buy. Will love to take a 3-week buy on NVIDIA, but didn't give our setup, so we'll bypass that. You could have took a traditional play, right? It is above the 8-pair moving average and crossed above previous week's high. So that could have been a play. Position 2 would stop out at previously slow. That would have been also an all or nothing play. Got Palantir in the lineup here. Palantir absolutely crushing it, man. Hitting highs of 184 there. So watch out, man. Palantir comes. But I'm gonna go ahead and mark that higher rotational zone there. Well, do I want to mark that, or do I want to move this? Okay, we'll keep that there. Yeah, we'll keep that there. And then we'll add this rotational zone a little tighter. Makes sense. Okay. Yeah, so there we are. Palantir looking like a whole snack essentially. But yeah, wait for it to pull back, man. Most stocks, they do pull back. The only thing that the arguments I have against it pulling back is that stock's so cheap. At 82, people can get massive leverage on the thing. Remember, Palantir is being added to the the Nasdaq. So some other things were taken off, and this was added. So that's just something to keep in mind. Yeah, SoFi is another one that has been making waves. Wouldn't mind being a buyer of SoFi even for the long term because it's so cheap. It's $15. So if any major player wants to come in and buy up a whole bunch of it, they could. They could buy and leverage in a lot. Tesla just going really to the moon here. Again, in territory that I don't necessarily like to like. My one good trade is down here in moving average clouds as it breaks out, right? So this catching all of that is kind of what we like to do, right? We'll show you here. Close to the moving average clouds, as it starts throwing indications for us, that's when you need to be buying. Most people want to talk about things when it's up at 3 ATR in the stratosphere, but catching it when it's in the moving average cloud close to trend changes, that's ideally where we want to get in. We got in Tesla a little 3 weeks early before the rally happened. I should have been watching for that trend change and a break above high there. Even still would have been valid. But and then a nice juicy pullback where you could have got in, and another nice juicy pullback where you could have got in again. So just one of those things that you kind of got to be on point. We did catch this one though. Just absolutely perfect, massive rally, and we got it off the break of a negative bias for the buy. So catching that nice trend in the juicy windfall there for that. We just kind of got a buy bias here because if you look at earnings, it was decreasing anyway. I was like, oh my goodness, got mad lucky. TSM. Sorry. We're going to scroll to the Rizite. There it is. So yeah, loving this kind of resistance here. And if we get a resistance break, could potentially be a very nice play to the upside with room to grow, by the way. With a lot of room to grow. No real setup candles other than the one that happened probably a couple weeks ago. This one. And you would stop out at the low. So you didn't really necessarily get stopped out for that boy. And that's pretty good. You didn't get stopped out, so if you're selling a play, let it keep going, let it play out and work out in your favor. It is close to the moving average cloud relative to 3 ATR. So you have plenty of room to roll and let it play in the hay. Same thing in an uptrend, but not as a setup. So just watch out for that. All right, guys. So thank you guys so very much for your time and for being professional traders. Make sure you watch those levels that I talked about on SPY and the Qs, really in the IWI. Those are really going to be the determining factors for us to start seeing, well, do we want to kind of lock in to the buy sides, to the downsides. Which direction the market is it going? Are we out in the clear yet? So we're being a little patient. We had that take profit on Cisco, and also our risk management on stars worked out pretty good. So hey, loving life, and we'll see it continue to play forward if the stock market will continue showing us good looks. So thank you guys. You guys have a wonderful day, and goodbye.